when you got into watches, you bought the Panerai. You've talked about
Hmm?
this before. Did you buy that as an investment, or did you buy that because like you noticed that people were wearing watches and you thought that there was like something you should have?
I was so into cars, and in the car forums, everybody had watches. So I was like, man, all these rich guys have watches. I have a car too. I ain't got a watch, so I need a watch. If I'm gonna fit in, I need a watch. So I started looking at watches. I never liked Rolex. I was never like into the Rolex brand. And honestly, the Rolex brand has evolved a lot lately. But I hated Submariners and stuff back in the day. So I was like, this is ugly. And I wasn't a fan of the Daytona. So for me, back then, it was very, very unique to say like, I didn't want a Rolex. But Panerai was something up and coming. And a lot of rich people that were car people were buying Chopard and Panerai. So Panerai really appealed to me. I liked the idea, I liked the story. So I started going after buying my first Panerai. And I bought my first Panerai off a dealer on the car forums, that basically got it for me. And I didn't really think much about selling it. I just bought it because I wanted it. Actually, I remember I was kind of stressing because I was like, oh man, that's a lot of money to short for a watch. And this, like, so what? I can get a cheaper watch. Because I had a nice watch too then, because my dad had gifted me a $7,000 Raymond Weil, which was retail $7,000, but used would have been like $1,200. But the point was that it's still a nice two-tone watch, and I was wearing it. So I didn't know about spending that much more on another watch out of my pocket rather than I had this gift. But I decided, you know what, I'm gonna do it because this is the trendy, like, hot thing to do. And so I bought a watch. But when I got tired of it, which I didn't get tired for a while, but I bought other watches then, and then I bought and sold those watches because I didn't like them. And then eventually I ended up buying and selling that exact watch I had. So like I bought it, now a year later I went to sell it, and I made money on it. Now I had made money on several watches, and I realized that like as I'm buying these things, right, I'm wearing them for free, I'm making a little bit of money. And obviously I was still in banking, so I wasn't thinking to my head like I'm gonna build a watch business, but I was learning the strategy unknowingly that you can basically buy low, sell high. But I wasn't doing it with a strategy of like I'm gonna look for this model. I was just buying things I wanted, and as I get bored of them, I was doing it. But by the end, I remember when I left banking, I already had like 8 watches on rotation. I was doing this with like as one would sell, I would do another. I would buy on Craigslist, which now doesn't exist anymore, but all these other places, and I would just kind of constantly move through them. And it was a very good experience because I was wearing all these cool watches and getting a lot of praise, and I was meeting a lot of people because of it, and it wasn't costing me anything. In many cases, it was making me a couple $100 a watch, and I was like, still extra money for doing nothing. And the watches kept getting better without me investing more money.
How did it evolve into like a real business for you?
It didn't really necessarily evolve. I just kept doing it because when something works, I just like get obsessed with it, and I'm like, I just gotta like make it work. So I was really obsessed with the idea of watches, and I went for it. And when I went for it, it just worked. Like it just like really, really hit. And I started getting a lot of watches in and out. But one thing that really started like captivating me to like, I need to do this more was that the guy that I admired, who was the guy that sold me my first watch in the car forum, had 2 cars. He had a Lamborghini Gallardo and a 911 Turbo convertible when I had just a 911 Turbo. And at the time, he got the Gallardo, which inspired me to get my Gallardo. But the thing about him was he was living really well. And in my head, I was like, what does this guy do? Like, and I was like, he's a watch dealer. I was like, watch dealers can't make that kind of money to like Lamborghini money. I was like, this didn't make sense to me. So I started just learning and understanding like how is a guy this rich just doing that? And then I realized maybe there's a golden opportunity to really like do that too, because I was doing it with 8 watches, and I was like, it was constantly moving and the effort was minimal because I was buying a watch, listing a watch, waiting, renewing my listing, and then it was selling. So I got on more forums, I bought more expensive watches, and I remember like I bought one of my first APs for a client. Actually, someone else, one of my clients was like, oh, just buy me this $20,000 AP. And so I bought an expensive watch, which gave me more credibility. And I didn't want to wear a $20,000 watch, but this was someone, he wanted to buy it. So I had it for a couple of days. And when I wore it, I felt really good. And I was like, I feel really rich. And I like that. I was like, I like that feeling. So it was like, I want more of that feeling. So after I sold him his watch, I bought myself a watch. I was like, I'm going to buy one too because I really like that feeling. And so by doing that, like over and over, then I realized that like there's money in all levels of watches, and just kept going.
Fast forward, you're teaching people. Start small, ebook evolves into a course. What surprised you about like when people started learning from you and really running with it? Like what surprised you about what you saw from your students?
Compounding knowledge leads to very fast results. So it took me like 10 years to do what these guys are doing in 1 year. It took me 10 years. My first student took him 5 years to do that. Now it's taking him 6 to 12 months to do what we're doing.
Yeah.
I mean, I just got a student that just went to like $2 million, like $1.25 million for like 7 months of work. I mean, that kind of money, we're jaded to it now because I'm like a lot richer than I was then, so it like doesn't matter. But to me, that's a lot of money. Like if you're making $1 million in 6 months with a hobby, like that's ridiculous. Like that's just not okay. You know, like that's like crazy. It's like unbelievable. Like most people will be like, it's either a scam or it's bullshit.
Yeah. If I didn't know who you were talking about, I would know.
So,
I would think you were
so
listening.
it's crazy. Like to think so many people are making just like 100 to like 200K a year doing this. But I think about that and I go, that's an executive salary. 200K. You know, like the CEO of a bank makes like 400 or 500 plus stock options. So I'm like thinking about that and I'm like, a kid sitting in his home using my training is making $250,000 a year part-time. Like that's insanity. You know, like that's crazy. So like that's very exciting.
What's interesting too to me is I see in the watch business like established dealers. There's 100 different ways to like play in the game, but established dealers like don't seem to understand the way that you teach it. I saw a tweet from a guy on Twitter who's a big watch dealer. Someone asked him like how much you need to like make a good salary, and he said if you want to make like 350 grand a year as a wholesaler, you should have 2 to 5 million
In inventory.
in inventory.
Yeah.
Which as a wholesaler it makes sense, but like there are guys.
No,
doing
but
that
I
with
would make that
half that.
using my strategy in a month.
Yeah.
So the difference is, and this is one of the things I tell people about what's really different about what we do, is a lot of people don't understand that we don't teach the dealer game. We're teaching people how to use money in a way to move it through watches. And that's a very different game because I have a banking background and I'm teaching people how to do asset trading. And this is very different because the dealer game is focused around retail overhead. The wholesale game is focused around inventory and money, so people just kind of go away from it and they don't have the resources and setup to do it. And the other thing that also happens is they only go after the easy prey. So dealers buy Rolex, Patek, and these things that are very, very popular. So they don't have to do any work. Basically sit there and they go, this is the coolest watch, everybody come buy it from me.
Right.
And that stuff I buy for me, you know, like to hold personally. But the stuff I trade is the stuff that like they don't want because they don't like it and people don't run into their store for it.
Yeah.
And so when we started Watch Trading Academy, I really focused on teaching that first, making it harder for my students to make money up front. And people never understood that. They were like, well, your strategy is stupid. Dealers would be like, you guys are morons. You're teaching them garbage and it's not real. During the rise and fall of watches, our students are thriving and dealers are going out of business because they're learning how to do more with less and the stuff that dealers don't want. So they're not competing with other dealers. And because of that, our students are making a ton of money and dealers are not. And what they don't understand is that we've taught this skill for a long time, even before they agreed with it or not. The other part they don't understand is that when some of the biggest secondhand dealers right now are selling on the internet, these big groups and these big like Luxury Bazaar and, you know, like the Govbergs and Watch Yuan and all this, these guys, they started with me. I was there in 2000 doing this too. They went down this path of like dealing and they're going to become dealers. I went to the path of teaching. But I've been around that long. So these idiots think that like these new dealers come in the game like 3 years of experience because their dad was a jeweler. And in their head, they think, oh, this guy's like on the internet talking watches. Like I was part of the transition of watches going on the internet. I just took a different direction, which is a lot more lucrative, both for me and my students than them. And a lot of them have this disconnect because they didn't rise through that. You know, so they're not competing in a very saturated landfield. Mm-hmm. And our students are not because they learned the other way, which was very different. So I think that we're in a better position because our students are able to make 10, 15% a month on their inventory. And if you're saying 2 million to 300, that's a month. Mm-hmm. You know, so if I have 2 million deployed, I'm making 200K a month. That jeweler is happy to make 200K a year. But that's, again, the difference between why I have a $20 million car collection and the guy's hawking one Huracan thinking he's rich in New York. You know, there's a different dynamic and mentality of personality there.
Do you think that the dealer, kind of that traditional model, is at risk?
It's been at risk. Like, it's been at risk because people buy price and people have metrics of discovering price, the same that car dealers were at risk when AutoTrader came out. The watch industry in the last 5 years grew because of tech. Tech came in and said, we track values, we give you access, we check authenticity. These were the things that in the old days you didn't have. So you had to go to your jeweler and be like, sell me a watch because I don't want to get a fake. But that's done now. Like now you have platforms like Grailz that check authenticity. You have platforms like Chrono24 that basically are a view into what's available, like AutoTrader for cars. Yeah. So you have access to information. That dealer model, that's why they're going out of business. They need more inventory to basically get less money per inventory. And at some point, the risk liability is that when the market crashed like 2 years ago, well, a lot of them were so high up into these watches, like they took huge drops they couldn't afford to take. So their capital got reduced 70%. We saw a lot of people come in and going because they couldn't support basically this model.
Mm-hmm. And to clarify, the problem with the type of inventory the dealers are holding is that they're buying and holding the inventory that sells itself. But the inventory that sells itself is based on kind of market value versus that arbitrage between like wholesale and retail.
So because demand and supply and demand is significantly switching at all times around these what we call more market-driven watches, which are the Rolex, Patek, AP, etc. of the world, these watches are constantly switching demand and supply ratios to the point where values are constantly fluctuating. So something is very hot, then it's not. And if you're holding the bag, it's done. If that's all you operate on, you're always operating against time. So it's risky. And what we teach is trading watches that don't get impacted by time as much first. Because that creates a baseline that when you learn how to make 10K a month doing that, that's consistent income.
Yeah.
It's not like next month, I don't know how I'm going to do that because the market shifted. It's the same thing over and over and over. So once you learn to do this, you basically are like, I now know how to make 10K a month. That's never going to end. Yeah. I'm going to go to 20, 30, 50, 100, whatever it is. But their game is 1 month they're making 50K, 1 month they're making 5K, 1 month they're making no money or they're negative. And that fluctuation means full-time attention. And means that if you don't have time to sell your watch, you could be at huge losses. But our students could be in and out and suddenly decide to take a 2-month vacation and their inventory won't be impacted by that. So there's a lot of value in learning the other way.
So like why doesn't, for example, like the market shift on a Panerai or a Hublot the way that it would on a Rolex or...
Because the demand never exceeds the supply. It's oversupplied and its cost basis for loss occurs immediately. This is the same as, for example, a Porsche that comes out is worth significantly more money up front because nobody can get it. But over time, more units come in the market, everybody can get it, and the price settles down. But however, in an Aston Martin, even though they may make less units, there is no demand for that. So what happens is the cars will sit, and the discounts will be immediate rather than over time. So you'll get 100K off on an Aston Martin the first week it's out. However, on a Porsche, it might be worth over 100K over sticker. And over the next 2 years, it'll go up and down between minus 100K to over 100K until it finds its place where it settles. Which means that at any given time, if you need liquidity, you're kind of screwed if you bought high because it might be the wrong time. It may not go up. It may go down. The demand is significant on the Porsche. The demand, despite the limited inventory, is non-existent on the Aston. And so because of the unit numbers on Panerais, Chopard, Cartier, etc., and the availability of the units, the discount is up front. So once the discount occurs, then there's no further fluctuation.
So meaning like a gold Panerai, 30K for like the Gold Tech, the sub, is just 15K the day it comes out.
12K is basically what its worth is.
Yeah.
And it's worth 30K. Now the dealer may sell it between the 12 and 30K back and forth 50 times, but he will never buy it above 12K.
Yeah.
So that moment on the buy is where the money's made. And if the buy right away is 12K, no matter the popularity, then that number is not fluctuating. And because of that, the margin that's played is above that, not coming up and down from that.